Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 21st, 2010. Now, just to keep in mind, like I've said many times, trading is very thin at this time of year. My trading personally is done for 2010. We have some potential trades forming here we're going to look at, but again, the closing few weeks we have for the 2010 calendar year are going to be very volatile, and again, very thin, unpredictable, choppy trade. So keep that in mind if you're looking at getting into any new positions. So our first position, with that said, our first position for tonight is going to be in March orange juice futures contracts. I can see a position beginning to form here. Our 3-day has crossed over the 8-day and the 18-day. However, it was a very shallow cross, and it is now starting to turn back up. Now, what I want to point out here is the triple EMA has not completed on this particular futures contracts, and with the 3-day crossing back up, we can see that our predicted short-term and medium-term predicted differences, are still above that zero line and are all pointing upwards. So a number of things here tell me our predicted MACD still above the zero line, as is the predicted true strength indicator. Even though we have a cross to the downside, this thing looks to be recovering. Now, I've also drawn a little small trend line right across here, coming in right around the 58-59 area. So we've closed the day at 158.90. Our critical level here, 158.76, 159.48, and 158.95. You can see how the predicted moving averages are basically all stacked on top of each other. Now, looking at our three major crossovers, if we look at our short-term crossover, we've crossed back to the upside. Our medium-term crossover is still pointing to the downside. However, our long-term crossover, again, you can see it's running flat and beginning to move off the trigger to the upside. So everything looks good here that this could potentially continue to move up. So now that we've identified that we want to get back into this thing on a long position, we're going to go into our daily report now and again try and fine-tune that entry point. Now, looking at our daily report here, we can see we have a predicted low of 157.62. Our high is 162.83. Our short-term predicted differences have turned positive. We can also see here that we're coming down from negative 3.2 to negative 1.8. So we're definitely making some progress in the short and the medium term. The long term still holding firm. It's so the short and the medium term, we're not looking for necessarily a long-term trade here, but for the immediate future, it looks like all pressure is going to be to the top side. So 157.62 is the predicted low. Now we're going to go back in and have a quick look at that triple EMA cross one more time. Now with 157.62 the predicted low, we have 158.76 is the 18-day predicted moving average. Now we're going to expect some volatility here. My view is that the 157.62 is a reasonable entry point because of this volatility, but again, it's going to be difficult for it, I think, to get all the way down to 157.62. So we're going to use the 158 level is our entry point. I believe that that's a reasonable entry point to allow for some volatility. And again, I question whether we're going to get all the way down to 157.62, but we might. Now, your aggressive traders, your a little bit more aggressive traders are going to be looking at 158. Your less aggressive traders, they're going to be looking between 158 and 157.62. And then, of course, we're going to be looking for our target back up into the 162 area. That's the first target. Now I also think we potentially have room to move back up a little higher, possibly into the 165, 167 area, but that's left to be seen. So your short-term traders, you're going to be looking at the 160, 190, 162 area. Your longer-term traders, they're going to be focusing more back towards the 165 to the 167 level. So keep that in mind. We have two different types of traders out there, but I think both can profit from this. Now, that's our first position. Our second position, we're going to go back into the foreign exchange market. Now our second position is in the US Canadian pair. Now what we're going to do is we're going to attempt another counter trend long position. My clients know that I've been recommending longs on US Canada for several weeks now. However, the bias is clearly to the downside. So what we're going to do is we're going to take advantage of this short-term buying, and there's potentially a dual trade here. Now I see a considerable amount of resistance between 102.10 and 102.50, and you can see this trend line that I have drawn right across here. And essentially it is held in place since the middle of October. This trend line has not been broken. So what I want to point out here is we are going to go in for one more long position here. We're going to be using the 3-day predicted moving average from Vantage Point at 101.37. We're going to use 101.30 as our entry point. We can see that our predicted moving averages, our 18-day, now comes in at 101.09, 101.09 on the 8-day. So we're basically, they're all stacked up on top of each other. The leading indicator here, however, is the 3-day crossing over both the 8-day and the 18-day predicted moving average. My concern still remains, though, that this is still a short trade based on what I'm seeing here, but in the short term we are going to try and push and challenge this 102, 102.40 area. Now once we get up into this, so if we get a minor pullback tonight towards 101.30, 101.30 is the area we're going to be looking for our to get into our buy position. Now I'm going to double check that. We're going to go into our daily report from Vantage Point and see what they have for tomorrow for predicted highs and predicted lows. Looking at this, our predicted short, medium, and long-term differences are all positive. That's a good thing. Our long-term is shaky, to say the least, at only 6. These two at 57 and 25 still look good. We have a predicted low of 101.23 for tomorrow. So we're going to use it. We're going to split the difference between 101.23 and the 3-day predicted moving average, which is where I would like this trade get in. So we're going to use about the 101.30 as our entry point. Stops are going to be in about the 1.0030 area. We need at least 100 pips at this time of year. You will not survive with a 30 or 40 point stop loss at this time of year, just to point that out. So for tomorrow, 101.30, we're going to be looking for a move towards the Vantage Point predicted high in the 102.20 area. Once we get up into that 102.20 area, I recommend closing out the long position and reversing and going short right in this between 102.20 and 102.40 area, with stops at about 102.90. So we want to make about 100 pips on our long trade, then we want to reverse this and go back in short, because again, crude oil and commodities are still quite strong, as are the equity markets. I really question how much upside potential we really have on the US Canadian pair. So those are the market positions for December the 21st, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.